welcome back to the RationalInvestor.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Happy Friday, TGIF and all that. Suppose can't get into the weekend fast enough. Here we are, the end of September. Man, this has been a shitty month, eh? My trading sucked major horse. You know what's this past month? It's terrible. And I topped it off today. I actually did not follow my process goals. I haphazardly put a trade on. Turns out the trade was actually a monster winner. But because I didn't follow my process goals, I took the trade off at scratch because I was cross at myself for not following process goals. And it turns out I would have been rich had I just left the fucking trade on. Can't win, I swear. Sometimes you zig when you zag and all that kind of fun stuff. But anyway, it is what it is. If anything, hopefully what I'm showing all of you is sometimes trader's life is a tad bit difficult. And you just got to ride out to try not to blow yourself up. I mean, thankfully, didn't blow up any accounts or make any stupid moves that would jeopardize my future and financial future. But ironically enough, taking a trade off at the wrong time can lead to major psychological damage if the trade actually works. But process goals are probably the most important thing for a guy like me. So didn't follow the process. So off to the penalty box Brian goes. I'm a little disappointed in myself today. But anyway, live by the sword, die by the sword. I suppose I could come up with a whole bunch of excuses, but in my journal today, what I just simply said is I'm going to have to do some self-reflection through the weekend and see if I can try and get back on board. I have a feeling that certain psychological things are at work with you with these funny little combine tryout things. And of course, they have like sort of month-end rollover kind of thing. And I think that was kind of messing with my head a little bit. So anyway, should make for some good journal entries. And, as soon as I saw the mistakes and I saw how psychologically I just wasn't with it and not acting appropriately, I just shut things down. And that's usually that's a good thing to do. So you can see by 7 o'clock in the morning, I had known that my day was done and I should just put everything away. And of course, did a nice long journal entry here. And like I said, I have to do some self-reflection over the weekend. Anyway, it's a trader's life. It's the way it goes. Your market report, obviously, I'm not going to be talking to you guys about how rich I am, although if I had just stuck to that damn trade, I would have been rolling in it today. Anyway, market report. As you can see from our beloved breadth indicator, which I have to say, the breadth indicator was absolutely spot on here in cautioning everybody September was going to be a bit of a train wreck. And it's turned out to be that way. Still negative. Interesting how fast is now officially oversold. And it is trying to tick back up, which leads me to believe and we're probably going to form some sort of bottom here through the month of October, which of course should set up for the very typical buy when it snows, sell when it goes scenario. So, I mean, it's business as usual in the stock market, which was kind of ironic. Looking at our histogram, interesting to see still a world of red. Crypto is so strong recently, though. You can see just even in the short term, we've had a lot of uppy. And I don't know whether you watched now my camera's gone. Chris, do you see that I'm no longer on YouTube? Wonder if Chris is even here. All right. So what a great analogy. I woke up this morning, I don't think you should ever make excuses for other people fucking up your day. but but Brian's going to. But I woke up first thing this morning and Discord had blown up. And I actually got the message. I couldn't believe it. Fucking Discord idiot losers. And this is such the way of this whole modern day world is there's no accountability for anything in this world. So I think I did it on Twitter, and this is kind of a waste of time. But actually, you know what? I'm not going to bitch about it. But Discord was fucked up, and just total train wreck when I woke up, and that, of course, threw me for a tizzy again. Process goals all messed up. 5 o'clock in the goddamn morning, I'm rolling out of bed, wishing I wasn't living this life, and I wake up to, oh, you have been officially banned from your Discord server. Like, what? Ugh. So, I mean, it's just been a shit show day. And as you can see, Chris is obviously having major difficulties there. Hey, look at that. Beamish is back. And you can tell I'm having a bad day because all I do is just throw water on my hair and just pat it and comb it back. And I look like a total greaser. So, what a shit show. Oh, well. Hope some of you are getting some value out of this. I see Adam's over there. Adam actually was hanging out. I got hats off to Adam's buddy Ed, the Californians. Man, they're I'm really impressed with that duo. They're actually out of Northern California, so they're not really so Californians. But Adam and Ed, oh, I'm so proud of those two. It was a pleasure chatting with you this morning, Adam. And Ed, if you are listening, but I think Ed's heading off to Disneyland with his kids. So congratulations, Ed. Ed's living the California dream. So, all right, back to market talk. Actually, it was interesting to see how on the Wednesday Coinigy show, I had specifically commented that I was like, wow, a lot of crypto is looking really uppy here. And then I think it was yesterday or the day before, maybe yesterday, we got news that the ETF for Ethereum was approved. And maybe that would explain why, people probably bought the rumor. There was rumors circulating that something big was coming down the pike. And you saw offers getting lifted because people didn't want to sell cheap prices. And I don't even know whether it was new buyers pouring in or not, or whether it was just simply a lack of selling because somebody knew something big was coming down the pike. So it was interesting to see. And of course, we don't really like to talk about it in these free videos, but it is interesting to see how after the fact we'll talk about it, because I don't want to talk about it during. Of course, now I can't show you, but our algo actually did flip back bullish over here. So it is sitting slightly up, but it is fascinating how that news came out. The market was popping. We rallied into a trendline resistance apex. So we had this little double bottom that I think was painting a trend line that the market was respecting. There's a heck of a lot of tags here. Actually, Marat's going to be our guest in the after party today, being Friday, our level 2 instructor. And we were talking lots about trend lines because I think that's the module that he's doing with the students this term, this week. And I think here's not a bad example of how, multiple sort of tags of a trend line actually validate the trend line. So you can see how important that trend line was here coming in for that rally. Also is a 2.618 off of this nice little W here. And we have talked to you at length recently, especially in the public discourse, that we had this pretty darn powerful market structure validated trend line that was validated right here. Boom, boom, M top. And sort of the message of late for all the public has been this market really isn't a screaming buy until we actually get a W on the other side of this trend line. So you can see how the market just basically slammed right up into it. And then had to take a bit of a pause. So, if we are still, I mean, it was fantastic little bottom that came in here. Beautiful MACD bull div, beautiful W's in things like RSI. Willie was nice and stupid. And he even had volume acceleration, nice W's in OBV. And that translated into a pretty good looking little trade there, 2.618s tagged, that kind of thing. Now the question here is, does this trend line actually just sort of stop the train in its tracks? I don't know whether there's any new fundamental information coming down the pike. And the problem with this whole darn thing is, if you look at the weekly chart, we are just so stuck in this channel now. You could even argue this is a narrow sideways channel that's forming moving averages. Of course, even today, 13 EMA on the weekly chart, stop the bull. And of course, our psychological level, Peter Fink's ETF low, all that kind of talk. That's the bottom end of our range, big fat round number, all that, and Collins pump chaser zone, etc. So on the weekly basis, we're literally stuck in the mud here. And so it does make sense to me why price is kind of stalling out a bit. So we'll see how that goes. Actually, it's interesting, good example of altcoins that are pointing up. This is one of TRI's principal's favorite altcoins. He has a fairly large position for TRI in this. And it looks to me like this thing wants to head up into 2.618s. Really good example of wicks and tails want to be eaten. So, of course, you can see the size. Where the heck to put it? Maybe it's over here. No, this one here. You can see the size of this wick. So there's a ton of trap bears up in that wick that would love to get released. So at the very least, I wouldn't be surprised if we rally up into this level. And then once we get up in here, and of course, you got a big fog and bomb staring you in the face. So, we probably also could do things like reload zones. Shouldn't surprise us that this probably lines up nicely with like Brian's favorite fib or something like that. So RLZ, boom, RLZ, yeah, you know me. There it is. Oh, look at that. You can't literally write better fiction than reality. Look at that. So I mean, I certainly wouldn't be in a hurry to sell something like this. The only problem is, are we maybe a little bit late to be buyers? You can see where this thing has come from. So, there's the bottom there. So I don't know whether it's a good idea to chase something like that up top. But, if you did buy down below, or even if you were able to sneak in off of these levels, you might think about letting them have some up top here if that does happen. And there's a lot of these little altcoins that are looking like this. It's quite remarkable. In fact, I think on the Wednesday show, I showed you like this link, same sort of thing. Beautiful daily double bottom right down here. You can see it just cranking up. You can see how, this is exactly the same thing as that hello chart. It's almost identical, eh? So we could draw a fib up here. What do you think the odds are? This is 78.6 Brian's favorite fib. Look at that, right into that wick. And there's your 2.618. So should we get maybe a bit of a pause in here and maybe even just consolidate a bit? It wouldn't be bad thinking, to be honest with you. So anyway, I'm just, the only reason why I mention it, because crypto seems to be the only sort of one that's bucking the overall bearish sentiment in the market. Right now, you can see, you can see everything else just is total a poop central. And interesting to see, somebody was even mentioning on the website here today that, the US dollar is just been screaming higher of late. And you wonder whether maybe it's getting a little overdone. And our tell, and it's such an awesome little tell. And I tell you, this tool, it'll keep you out of a lot of trouble, and it'll set up some really good trade ideas, and it's such a shame. We get 11 viewers of this video. Or give us some feedback, post in comments and stuff. What can we do to boost the viewership of this? Because this is going to be a textbook example. When all of these currencies go oversold below this, red line, you can see on the short term, currencies are at -80. On the medium term, they're -70. So they're getting awfully close. But, as soon as this thing goes oversold, this is going to be a slam dunk that the US dollar is hitting some sort of pivot top, and these world currencies are going to start rallying back. And what's interesting is if you look at the price chart, it makes sense. I mean, look at this US dollar. I mean, is that not due for some sort of pullback? It's interesting how we actually have this technically, this is a daily price chart. This is a bearish engulfing bar on the candlesticks. All you candlestick and aficionados, that's a sell signal. So, it's fascinating to see how this stuff plays out. And you look at the price chart, good old WD Gann, he would just simply say, and then think call in pump chaser zone kind of idea. What's a realistic place just to look for a pullback, not a bull or bear new trend, but just a pullback. So where is our Colin? There he is. You can see we probably are due, and what a surprise. There's the 200 SMA. So we're probably due for some sort of pullback 103 to 104 area. And that, of course, is going to clean up this situation where all the currencies are all just ridiculously oversold. So, I mean, the interesting thing here is all of you currency traders and all you futures traders, you should be watching these currency markets for long setups in things like the euro and the yen and the Aussie and the Canadian dollar and the Swiss franc and all of that. Because I'm telling you, there is a trade coming here. I wouldn't necessarily trade the US dollar index itself. And it's actually kind of difficult to trade this. You could trade the UUP, which is an ETF, but ETF land, they kind of fuck you over in prices and stuff. But what I would do, and my suggestion would be, and maybe we'll look at this in the after party, is go hunt. What does the euro look like? Maybe it's coming up to some sort of pivot. It's interesting. Euro structure trying to move up here. Canadian dollar, this is probably the commodity currencies. I don't know whether you've noticed what's been happening to the commodities lately, but they're getting absolutely smashed here. I would maybe avoid the commodity currencies. I don't think that these two currencies should be in bear markets for like literally the next 10 years. So, but anyway. So it's interesting to see how the dashboard is already helping set up trade ideas here. So it's fascinating. Recent signals that we had, I was barking about this recently, but like I love my key reversals, and you're not going to find this kind of information anywhere else online. But right off the bat, we talked about this on the 19th of September. We actually had a bunch of oil and oil related key reversal signals. And this is the shit, man. I mean, this is what you're looking for if you're a trader. There's the key reversal signal. So, not seeing what you're seeing in crude oil today actually shouldn't be a shock whatsoever. It'd just be interesting to see what the other one looks like. What was this? NOV. And there's a bunch of bearish chart patterns in these. I mean, key reversals themselves are pretty cool. Where are we here? This one, well, actually, this one looks like it got stopped out. So, all right, well, not all of them are going to work all the time. There you go. That's what happens when you do these videos on the fly, eh? But like COP is Larry Fink's favorite oil stock. That's one of his big holdings, big bearish engulfing bar. And you could probably go through the list of them. Schlumberger, nasty double tops, another bearish engulfing bar. So there's a lot of bearishness out there in oil land. It doesn't surprise me to see the Canadian dollar kind of getting beat up here because it trades a lot on oil price. Also interesting to see how the gold market is just getting smoked here, gold and silver together. So commodities in general are pretty tough. You want to see that crude oil? Oh, and look at that. The damn crude's working its way back up to the VWAP. I was actually long this inverted head and shoulders and got stopped out before we started the video right on this M top because I was like, oh, I don't want to be in this if this thing's breaking down. And sure enough, back up it goes. But believe it or not, and I mean, this is awful, but the crude short I was in this morning was right there off that double top and had lots of confirmed bear divs and the whole damn thing to set up the trade. And I had put it on, the Discord thing blew up and I was all frazzled and I took the trade off at basically scratch following the pit open, and you can see what happened. Oh man, one trade would have made you bloody rich. Anyway. All right, so where can we go next? thing. Actually, here's an interesting question, an economic question for all of you. I put out, and actually, I think this was Hafed in the harmonics group. He put this chart together, although I'm not quite sure what I'm doing here. And this is the Federal Reserve Bank of New York. I think this is the reverse repo. So take a screenshot of that and tell me if you agree with this. I think what's happening here is this is a liquidity squeeze. And, by all means, Hafed, I think I posted that. Thank you very much for that chart. But I am going to be studying this economically to try and help me understand what's going on here with this repo business. And if I understand correctly, this is like they're draining liquidity out of the market. It's interesting how we came into a 2.618. Are we going to pivot here? I don't know. But it was interesting too to see that Hafed actually, I think it was Hafed, maybe I better correct myself before we go too far. Let's see, was it? Oh, no. Oh, it was Igor. Sorry, Igor. I thought it was Hafed. My apologies. So anyway, Igor said here, so RRP is a credit crunch. I think that's what he's saying here. So there was his chart. So anyway, shout out to the Harmonicans. It's interesting that the Harmonicans even have a harmonic here coming in right around where my 2.618 level is there on that chart. So are we staring at, oh, now where the hell did the damn thing go? Are we staring at potential, and the data coming out today, it's not bad. So if anything, if the Fed's trying to slow things down, they're trying to engineer a correction, trying to engineer a soft landing, whatever you want to call it. Did notice that, the econs, we were, what's the tone out of Europe? European inflation rate below forecast. PCE headline inflation set to bounce higher. This I do, of course, before the market opens, before all the econs. We had a bunch of econs at 5:30 a.m. So those econs that came out 5:30 a.m. I don't know where my thing is, so I'll just show you this. They came out relatively okay, right? So now they show core PCE inflation slows down. So that's sort of, what is the market taking away from this? Remember I told you before, it's not a bad idea when you're starting your day just to take a boo over at what Asia did overnight and what Japan did. And you can see Japan's kind of like flat on the day. So I don't think it was necessarily like we were looking for a huge boom higher, huge boom lower. If anything, with Japan kind of soft, kind of like neutral, really, not really soft, not really hard, just neutral. I'd probably be looking for the same thing out of North America. And I think ironically enough, that's basically what we're getting. If we look at the stock market, and I really didn't go through my regular routine, like I said, I was rather upset at myself today, really poor process goals. So as soon as I saw the kind of silly trading I was doing and the attempted trading, I just shut things down because I wasn't acting appropriately. And here we are, we're up 0.25% on the ES. Looks like we're trying to put in a double bottom. So, we did put in a double top earlier on this morning. Now a double bottom. My hunch is, here's settlement right here. So we were just about at flat line. It looks to me like they want to take the market out up on the day. If we look at our 4-hour chart, these are the levels done yesterday. I didn't really do anything here today. You could see if I was acting appropriately, I could probably look to sell against these highs and against ATR. That to me seems like a perfectly realistic level. And I suppose if I wanted to buy, we have a little bit of horizontal support and resistance on the settlement price, but I suppose we could also argue that that low is a pivot low. So somewhere down in here, it doesn't really surprise me. We got two moving averages that supported price, and quite often a lot of traders will just simply buy. If the market's above and we dip in and tag settlement, they'll just buy settlement. So the fact that we have settlement and we have two moving averages here, it doesn't surprise me traders stepped in on the long side and bought that low. Interesting though disconnect, right? We're into one of these funny scenarios where it looks like tech and high beta is catching a bid, but old economy and brick and mortar or whatever you want to call it is slightly down on the day. Does that produce basically a zero sum game for the rest of the day? I'm leaning towards that. I will say also too, and what time are we? Yeah, we probably should wind this up. Maybe we'll just come complete full circle here. When I look at the futures and I look at something like Bitcoin, I noticed that Bitcoin is a great leading indicator. Remember, the whole market was kind of poised downward. Then Bitcoin caught a bid. As you can see, I haven't updated my levels here this morning. Again, tis, Brian. Process goals. Oh, Jesus, little bit sloppy here today. So interesting how they left a bit of a price gap right there on settlement today. In fact, probably going to be looking at something like that as a trade location. You could, with good old Bitcoin being as volatile as it is, we could see Bitcoin actually work its way all the way right back up into those higher time frame moving average resistance levels. It's got to get through this 13 EMA on the weekly chart, though, and I think that explains what all this traffic is against these highs and stuff. But if this thing, maybe what happens here is we create something like a big bull flag. Right, it looks something like that, and the bull flag just simply takes the flag pole and just replicates it wherever the consolidation finishes. Usually it's about 2/3 the apex, and that would take us up top. That's totally realistic. But I guess what I noticed here was that you can see on the rally off the lows, they put in an M top here and they started to break it down. So interestingly enough, based on the M top, and this is, I guess, like following now the ETH news, I would be thinking something along like that for support and resistance, just using a simple principle that we teach in our level 2 program, trading trend channels. I suppose you could also do a channel off of that level as well. But I think probably for default, I like how, this midpoint is an excellent pivot. And you can see how the market's already respected that in the past. So, and also too, interesting how that's a ATR level there. And then if we do something like draw a trend line off of the lows, then you notice, oh, okay, well, maybe we're going to probably intersect it somewhere around here, which would make sense coming back from the holiday, probably through the weekend. I've been noticing of late, Bitcoin doesn't really do a hell of a lot through the weekends, probably because it's just too expensive for the kids to really participate too much. They're just going to be playing altcoins and stuff like that. I suppose if this low is slightly lower than that low, we could go off of that level, which would also kind of correspond, nice little dip into this area. So, if I was trading the futures for Bitcoin, I think I'd probably really sort of hunt, trade area down in this area, especially off of that low there. That looks like a nice pivot to hunt. ATR, trend channel midpoint into these moving averages. But this ain't going to be a straight line. This could be up and down and up and down. So we always say wicks and tails like to be eaten. Interesting how that wick right up there is probably going to be eaten. Maybe that even happens through the weekend. They gap it higher into resistance, and then we'll come back on Monday morning and see if there's a trade setting up off of there. Or we have to roll over and dip down into these moving averages, trend line support, channel support, and horizontal support and resistance down in here. So it's a pretty wide playing field for Bitcoin right now. And I think that at the moment, right now, the bears got the ball. So that's off of 4-hour chart. Okay, I think I've said my piece. As I had said earlier, Dow, interesting how it's just sort of hovering right at the flat line. I think you're probably going to see that persist for a bit here. I wouldn't be surprised if they have the market parked exactly where they want it for options expiry. NASDAQ's catching a bit of a bid, coming off a bit though, and you can see interesting settlement and moving average support. And then put the two together, smush them together, you got your ES. And same sort of idea. Do we kind of just pull a Japan here into the end of the day and flatline? My hunch is, yeah, that's the case. So, all right. I don't know whether that helped or not. Hope you enjoyed the broadcast. Come on over for the after party. Going to hang out with our level 2 instructor, Marat, our special guest for Friday. And he has actually a very unique way of looking at the market. Well, not unique, but individual. And if anything, maybe we can even get him to include a little bit of his thinking about relative rotation in our education program down the road. That would be kind of cool. Anyway, all right. So be sure to pop on over for the after party for that. Other than that, slow and steady wins the race. PMA for the win. Don't take no wooden nickels. Just keep in mind, big picture stuff. The market's still not really very happy. And I wouldn't really get uber bullish in the market until we actually see one of two things. Either A, we actually do get a W in the fast, and this thing starts crossing back above the slow. Or B, they just absolutely puke everything out and everything goes oversold, which we don't really have that right now in the short term. Interestingly enough, we are approaching that kind of condition on the currencies. And if the US dollar actually does top out as sort of the fear proxy in the marketplace, then that actually might set the stage for a nice rally in the broader market, risk markets, all that kind of fun stuff. And, if we saw a bottom come in the middle of October and over the next couple of weeks, and then things start to rally into the end of the year, or maybe we even like double dip and we get a test of the lows into early November, that would just be so perfectly seasonally normal that it would actually be very cliche. So there you go. All right, everybody, PMA for the win. Slow and steady wins the race. Brian's got to do lots of journaling and self-reflection this weekend. At least I'm an open book with all of you. I don't bullshit you. Yeah, I had a bit of a tough September there, but all I can do is just try my best. So all the best, hugs and kisses, and bye for now.